Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 31st of May, last trading day of May, 2017 at 1:43 p.m. Central Daylight Time. All right, my friends, gold's going to finish out the day strong in the neighborhood of $1275.40. Now, I was on Bloomberg this morning. I hope you saw my show, and I was asked about gold, and I explained what I'm seeing on that 200-day moving average of close on the daily and 200-week. I am seeing all-important action. Does this mean the market's ready to run? No, I made that very clear. Do I think the market's in a bottoming process and setting up a major bottom? I do. I think the element that's missing is wage inflation. It is elusive. That means that buys here are still trading a fair buys. Not I'm going to buy it and hold it forever just yet, but maybe I'm wrong. Maybe that is the way to trade it. I don't know. I give you ideas, that's all. If you look at the weekly chart, you got higher highs, higher lows. You're following through to the upside. That is all bullish on this chart. If you look at the August gold, the daily area chart of closes, right on up, and this is the highest close since the break low in early May at 1217.80. You can also see how the market has come up here, and admittedly, as you get into this area, you're going to see resistance. I doubt this market's just going to soar up through there. Why should it at this point? If anything, if you saw the beige book today, even that says that we don't have that wage inflation we're looking for. But when you look at how the market's doing, you got the higher lows, higher highs on the swing line. The market is over the 200-day moving average of closes, which I contend is the battleground. What you're now looking to see is, can that 18-day average get over it? And that number is 1255 on the 200, 1247.80, and the 18-day average is going to climb again tomorrow. Where do I think the resistance comes in? Probably in this 1280-290 area if it can reach there. That's a pretty important resistance area from the highs you got up here when you hit that 1300 level. The market is also trying to embed. Now, embedded happens when the momentum indicator switches from being overbought to trying to lock in an uptrend. As you can see here, both numbers are over 80. Yesterday they were both over 80, but not the day before. So you'd have to have them both close over 80 again tomorrow to embed. Embed means you've converted from being overbought to locking in a bull trend until the red line closes back under 80. It's a pretty simple theory. When you get to the ETF of gold, GLD, higher lows, higher highs, embedded reading, past tense. Day 1, 2, and you had it, if I'm correct, let me just check it. Nope, Thursday you didn't have it. So Friday you have it, Tuesday you have it, and today, I am right. Today was the third day. You don't have it in the futures, you have it here. I'm looking for 121.60 or so, the upper Bollinger Band. Market looks good to me until you lose that reading. I've mentioned that the gold miners were in the downtrend, and suddenly they're making a stand here against the 18-day average. Get over 2305, and you actually could have a situation of higher lows, higher highs over the 18-day average, and that might carry you to 2365. Is there anything on this chart that says it should soar? The answer is no, because momentum's still pointing down as prices are trying to get their footing. When I move on now to the August gold versus the July silver, you're out of the correction zone. Today, with this action, and I drew this line so you can just see about where it's at, you've gone from 72.63 to 73.56, and you take out this past low on a closing basis. So you're out of the downtrend. Now, are you in an upthrust? Well, I can name it that until you take out 72.63 again. And as you can see in silver, it too has got a situation where both numbers are under 60, over 80, and over 80. You got your third day. So pullbacks in both the silver market, the gold ETF, and possibly gold if it gets through tomorrow, are still looking as though the bulls will step in for them. Lose the embedded readings, and they'll probably get dumped very quickly. As we get to the copper market, seeing that the Chinese PMI came out much better today than thought. It was still a gain. It's 10 months in a row. And that means that the real slowdown that was looking for isn't happening as quick as people thought. And that gave copper a bit of a bid today. But you still have a pattern of a higher high and a lower low. There's nothing real substantial there. You're still in an overbought area in need of a correction in the platinum market, and you've got a pattern of a higher high and a lower low. Yes, the bias is up because you're over the 18-day average, but there's formidable resistance between 970.80 and the upper Bollinger Band of 969.10. That's the 100-day average of closing prices. In the palladium market, I had said I thought this market was going to run against the platinum as they unwound the spreads, and that's what they've done. Higher lows, higher highs. 823 next target if it can get there, but you're already in overbought condition. In the dollar, this is helping all the metals today as the dollar's slipping. Now, is the dollar in a downtrend? You're going to say, and you rightly should say, well, you got a higher high and a lower low, that the swing line's not trending down. I agree with you, but you have an embedded reading. That's the #1 hierarchy on the chart. And it's also under the 18-day average. So this market still remains very much in the bear camp. That helps the metal markets to a degree. You know, I write about this in detail in my reports. And then in the morning, I start people off as they have their coffee. That's why I've got a coffee mug there, with a videotape. And in that video, I cover 40 or more charts. And believe me, I throw out trading ideas in all the markets, just not the metals, be it the currencies, whatever I see going on. I'm going to tell you what I think the pros are doing, what I think should be done. In that video, I can say buy here, sell there. I cannot in these videos you're watching. I give you an overview of the chart action, but my real buy sells are going to be in here. If you haven't tried this and you're watching my videos, folks, you're missing a big part of what, in fact, you're missing the meat. You're seeing the potato on the dish. You're not getting the meat or the fish. Depends what you eat. You're not getting the main course, that's for sure. To get that, either call us at 866-973-2077. Go to our website at www.iraepstein.com. You can click up here. You'll see an icon, and just click on that icon. If you're watching me on YouTube, underneath us, it's going to say, of course, click here. If you're on a website, many of them say click here for Ira's free offers. And if you've already had my free trial and you're waiting for that discount on my research, it's right now. Ira 20, go to the website, go under Ira's research, and under that you'll say become a subscriber. You'll get a coupon area. Type in Ira 20, you will get it. I'm Ira Epstein. You have a great day, and I will talk to you all later this